All right, my theory for a while now has been that everything would go up as the dollar goes down. I'm seeing a lot of the same perma bears already trying to short this rally. These are the same people that tried to short this rally. They're making the same mistake again. If I think if people would just look at the weekly charts from time to time, they would have a better idea of uh, what the big picture is and wouldn't make these mistakes. But S&P, nice bullish engulfing candle. Odds are very high. This was an intermediate cycle low. Would have liked to see this come a little bit deeper and maybe test this 2650 level, but I noted on Monday I thought we had maybe a intervention in the stock market to stop the sell-off, and it looks like that was correct. So anyway, odds are very high. Intermediate bottom, intermediate cycles tend to rally 12 to 20 weeks before they top. This one was 19 weeks. Um, um, Officially, this is not even week one because we haven't had a swing yet. Next week would be week one. So there should be a lot of um, time yet, 2 or 3, maybe even 4 months before this rally tops. All right, same picture in the in the Dow, bullish engulfing candle. Odds very high. This is an intermediate bottom. All right, same thing in the Nasdaq, bullish engulfing candle. Very high degree of confidence that we've got an intermediate bottom, and in 3 to 4 months yet before this intermediate cycle tops. The leading semiconductor index actually was the biggest mover of the indexes last week, rallied over 6%, and the semiconductors also completed a weekly swing. The other indexes haven't actually done that yet. They will need to um, complete a swing next week. So the semis are a little ahead of the other indexes, but also I guess I should note they are back above the 2000 high, which is at 1362. So I think the semis are now set up to give us that sustained breakout, um, and I suspect a a strong rally for the next 10 or 15 years. I'll go back to a long-term chart here so you can see here's the bubble top, long basing pattern. This is how bubbles play out. They take a long time to recover. 19 years into this. This last intermediate cycle, as I noted, had broken out above this level, but had done it too late in the intermediate cycle for the move to be sustained. We were going to have to come back and retest. That's what we've done. Now we are starting an intermediate cycle, and we're only on week one, and already the semis are closing above this high. So now we are set up early in an intermediate cycle. So at this point, we are set up for a sustained breakout, one that is not going to come back and test this level again, and one that will be moving much, much higher over the next 10 or 15 years. And ironically, um, the stock market is in the same position. We're very early in an intermediate cycle. You can see that these rallies, they tested this high, this breakout, but they did it too late in the intermediate cycle to get a sustained move. Same thing here. Now we are set up to test this top of this consolidation, and this is a consolidation box in an ongoing bull market. This is not a top. This is the same thing as happening here that happened here and here. These are sideways moves after long rallies. It sets the stage for the next leg up. And we are now set up to break out above this consolidation box, do it early in an intermediate cycle, and that should set up the next strong trending move in this bull market, similar to this move here. And ironically, this is happening right as everyone is starting to look for and expect a recession. So everybody is on the wrong side of the boat, and they're being set up to miss the next rally. Moving on to oil, we've got a potential bottoming candle here. For some reason, my spidey sense is telling me oil may have to have one more lower low in the next week or two. I may be wrong. We'll just have to see how early next week um, starts out. Maybe I'm wrong and this is a bottom, but even if I'm right and we still need a little bit, one more lower low, maybe an undercut of this level down to 50 or maybe a little below that. Um, we're close, and then I think oil will join the stock market and head higher. So I don't think there's much more downside left in the oil market. Moving on to gold, exactly, gold is playing out exactly as I predicted it would. Got this cup, handle basing pattern. We're breaking out of the handle. This is a bullish looking chart to me. Let me widen it just a bit. All right, now we've got a resistance zone, let's call it between 1380 and 1350 here. Gold is finally pushing into this resistance zone. It's doing it early in an intermediate cycle, the same as the stock market is, same as the semiconductors are. So it is set up to finally break out of this long basing pattern and give us a sustained move. I think gold is probably going to make it to 1550 or to 1500 before this year is out. Sometime over the next 3 to 4 months, I think gold is going to get to that level. So we're set up for a breakout. However, I will say this: it's getting a little late in this daily cycle. This is a major resistance zone here. It seems a bit unlikely to me that gold is just going to slice right through this resistance zone on the first try. So we may have to back off for a week and a half, maybe a couple of weeks into a daily cycle low, take a little breather, regroup, and then break out through this resistance zone. So I'm not convinced that gold's going to go through here immediately, but I am convinced it is going to do it this year. So gold is following my theory. It is moving up along with the stock market, and like I said, I think oil, if it didn't start the move this past week, it's going to do it in a couple of weeks. So again, everything seems to be playing out as expected. Gold is following everything else and moving up, and it's set up very nicely now, early in an intermediate cycle, to finally break out of this basing pattern. And then finally, the one market that doesn't look good is the dollar. We've got what I am about 99% positive is a bull market top, beginning of a bear market. The dollar bulls have been giving us one reason after another for why the dollar is bullish and going much, much higher, and yet we've got a 3-year cycle low here. We've got a rally out of a 3-year cycle low that's a year and a half long, and it isn't even remotely close to taking out this 2017 high. If the dollar was in a bull market, should have taken this high out, should have done it early in the 3-year cycle. We're halfway through the 3-year cycle, and I'm pretty sure we just put in a top here for this 3-year cycle. And now we're in the declining phase of this 3-year cycle. And by the time this is done, sometime we'll be doing, I guess, sometime in early to mid 2021, we're going to break these lows and confirm the bear market. So everything is playing out as I have been expecting. Everything moving higher, with the possible exception at the moment of oil, which I think ultimately will join everything else in moving higher, and the dollar breaking down and preparing, I'm pretty sure, preparing to confirm this bear market.